Once again, this is where people who take their blinders off are going to be very successful. There are many people out there that say, why would I ever refinance right now? I would never refinance because interest rates are so high. Well, you would refinance if actually you needed to, and you needed to have equity, and you thought that the property was going to do this for the next few years. And so we're seeing the very successful firms. And these range, by the way, from very large, very active, and you know them. They're the big names in either multifamily or some type of real estate vertical. But they're always known as sort of the sharp ones. But it's also happening to the ones that are smaller and leaner. And they're proving to the point that, hey, just because we didn't buy a bunch of properties, we do know how to operate. And they're using this, as I said, this is a very consistent. It wasn't like you go into one shop and they're doing one thing and not the other. The really good shops are taking all the data in, analyzing it, seeing what they can see, and then using that data to make scenarios and see how those scenarios work and impact their debt positions and their equity positions. And it's really just cash management.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CREPN Radio. Thanks for joining us. My name is Jay Darren Gross. This is a podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist. Protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Rob Finlay. Rob Finlay is a certified property manager and is a commercial real estate expert with a broad portfolio of success stories developed through hands-on work and multi-generational industry experience. With decades of experience in every facet of CRE, from analytics to acquisitions, operations to finance, and more. Rob's insights are derived from real-world wins and cutting edge of industry innovation. And in just a minute, we're going to speak with Rob Finlay about strategy changes needed for commercial real estate owners and asset managers in the shifting markets. But first, a quick reminder. If you like our show, CREPN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Rob Finlay. Welcome to CREPN Radio.
Thanks, Darren. Thanks for having me. I'm not sure with my past description anybody knows what I do, but that was quite involved. But thank you so much for having me here.
Well, I'm going to give you a second here to try and straighten that out here, if that's all right. Before we get started, if you could just take a minute and share with the listeners a little bit about your background.
Yeah, sure. So I've grown up in commercial real estate. My dad was in brokerage and property management. Professionally, though, I'm probably best known as the guy who created Defease with Ease, which is a place where people go to use our services to get out of defeasances or to do a defeasance. But either that or some of the other businesses I've built along the way, such as IMS or TCAM. I'm also a real estate investor and own multifamily and office throughout the United States and invest all along the capital stack.
Got it. Well, let's jump into this. We're recording this here in April of 2024. Last couple of years have been, I guess more recently, the last year or so has been more interesting. How do you see the marketplace with respects to uh, today versus, say 18 months ago with financing, and cap rates?
Yeah, well, I think the whole dynamic of the industry has changed. Paint a picture, just remember back what it was like a few years ago in a real estate shop, right? You had acquisition analysts crunching deals, grabbing deals, and everybody's trying to do deals because you're getting revenue associated from acquisition fees. You turn around, the market is great, capital is cheap and plentiful. It's a transactional period of time. The more deals you did, the better, until the music stops. And fast forward to today, what it looks like in a real estate shop. You've got people focused on the deals that they bought, and they're trying to figure out how to make sense of them, how to make them work, how to be strategic in their thinking, how to be strategic in using all of the sort of the levers that they have available to them to produce returns for their investors and their owners. And I really think that's the big thing right now is we are now a more operationally focused industry than an acquisition focused industry.
No, that's pretty well said. I think yeah, when money was super cheap and it was all about get in and get out, it was all about the acquisition and sell it to the next guy
Yeah.
as fast as you could for more.
And I think it
So,
wasn't, I think what's really going to turn out to be the proof is in the pudding, right? The ones who necessarily were able to do a lot of deals were maybe not the best real estate operators, but maybe the best at raising capital and presenting a picture. Whereas now there's a true delineation between those who can perform and those who cannot. And that's going to be really, and it's just starting. I mean, I'm a big believer that this market is not, we're not going to turn on the switch. Interest rates could come down 25 bips, 50, 75, it doesn't really matter. That's not really going to change what's going on in the market and really changing the dynamic and what people have to do in order to really perform and do their job and do what their investors expected them to do. They invested with people who could invest in real estate who said they were experts. Well, let's see, make sure that they are.
so let me ask you, across the asset classes, is this the same across all asset classes? Or, I mean, obviously we've heard, a lot about the challenge that office is facing. Is the focus on operations, is it ubiquitous? Is it across the board?
Yes, yes. I think it's just the difficulties are, or the challenges, I should say, they have some similar challenges. Obviously, debt, equity, valuations are similar challenges, but operationally they have different ones, right? There's tenancy, there's in some cases there's tenancy in office, whereas there's tremendous oversupply. We all face the insurance challenge that so well. No matter what type of property you have, insurance becomes an issue. Government regulation, we all have sort of the same. So maybe a little bit more in the multifamily space. So I think it's bottom line is that we are all faced with challenges. Some are similar, some are just specific to our industry, and in many cases, it's also specific to our region and our location. Right? Obviously, California has different operational challenges than Kentucky, right? And vice versa. So it just becomes a very specific. So to throw big broad strokes at a problem, we all face one area, right? Interest rates, debt, and equity, but the other is operational.
So I'm curious, in your experience, have you ever seen it where multiple challenges have come at the same time? I mean, we talked about interest rates, you mentioned insurance. Is this kind of a unique time in commercial real estate?
No, I think we just have to look back at history, right? I think there's you know, one of the great stories I like to talk about is growing up in New Hampshire, and I think it was like the fall of 91, or it might have been 92. 8 of our banks, our local banks, got taken over by the RTC and the FDIC in like one night. Like it just automatically happened. And over the next few months, there was this massive transition of wealth from real estate owners to people who are outside the industry, right? And so I look at this time as this is a time of opportunity for people who can look and say, okay, there are challenges. But we've always had challenges, right? You had the great financial crisis had their set of challenges. The RTC or FDIC challenges of the 90s had theirs as well. These are just a combination of things, right? It was a overactive market that needed to be it needs to be corrected. And so, sure, if you're an office owner, yeah, you had COVID, which was something that probably you never really expected to see. And clearly we haven't seen that in these historical markets. But it's all comes down to something that's dynamically changing. And I think that's where owners today need to take the blinders off and open their vision to see things that are going on. I think people talk about COVID and how it happened and impacted the office space. Well, you know what? Look what the internet did to Walmart, right? With Amazon. Look what the look what look what Netflix did to Blockbuster, right? These are dynamic moments that we see. And it's easy to blame. Hey, it was the internet. It was COVID. Okay, you got it. But smart people will make a tremendous amount of money off of these transitions. And that's where operations come into play. People need to put into a strategy that is going to be focused on understanding where the issues are, where the opportunities are, getting their team aligned to go after this new dynamic, and put a game plan in place using data and analytics and innovation to oversee these changes. And it's the people who will be very successful right now.
So let's talk about the focus on operations. Um, how would you compare like a historical model of operations as opposed to what you're referring to as far as some of the changes that operators are going to have to make in order to, I guess, improve operations and make them more cost effective?
Yeah, I think one of the biggest changes that we're seeing is the elevation and the expansion of skill set inside the asset managers, right? These are the people, these are, above the property managers, these are responsible for asset. And we're seeing that their skill set in the past was pretty much, I hold on to it. Yep, we have a value add strategy. I'm going to make sure I'm going to monitor it. But quite frankly, I'm prettying it up to sell it. And now you're seeing these asset managers who are now having to think about strategy. What's the branding of the property? Okay, we know what we're dealt with, right? Everybody in the real estate knows we're dealt with interest rates, we're dealt with oversupply, we're dealt with government intervention, all this stuff, expense inflation. You can just go through all of this stuff. Knowing that, what do you do? And I think where we've seen the expansion of the skill set is that understanding that a strong asset manager is not just a property operations person, but they understand the dynamics of the market. They understand the dynamics of the capital markets, debt and equity, in order to position the property in the right sort of trajectory to be successful. And that's where the difference is. It's very much, this is a long-term hold. You have it. This is your business of running real estate. You're not an acquisition company like you were a couple of years ago. You are an owner and operator of commercial real estate. And so the whole organizational structure needs to be adjusted to compensate for this new this new model.
Yeah, I like your comparison there, or your kind of your sense of the focus or the change of focus from the in out to the we've got to operate this and make it work kind of thing. So in that long term operation model, and you mentioned being aware of like finances and those kinds of things. Are there specific tools? Are there specific places that you see the operators or the asset managers focusing on and changing, or is it more of kind of a global, just a head on a swivel kind of thing trying to figure out where things are going, or how just to, improve at all levels?
Yeah. So what we have seen and what I've seen from either organizations that I've done business with, or ones that I've invested with, or the ones that I really think are very sharp and smart, we've seen almost a very consistent game plan, which is first and foremost, gather as much data as we can, synthesize that data, right? And so that's the use of some technology, right? Data and analytics. They have so much data that's out there that is much greater than what it was for acquisitions. This is really looking at the property operations, benchmarking competitive properties. They take this data, and once they take this data, they look at it and they run scenarios. The good operators are running what if scenarios to a level that we've never seen before. What if this happens? What if this happens? What if my rent goes up 3%? What if these 5 buildings actually do get built and I'm going to start to see supply change? What about this? What about this? What about this? So what they're doing is they're setting up the potentials of what could happen. So they're using technology to run these numbers, and it could be Excel, it could be a product that does that. But they're gathering this information to now set, okay, the asset is going to do this. Then the next thing that they're doing is they're matching their cash needs, debt service, my loan's going from IO, interest only, to amortizing, or hey, my cap is coming due and I've got to do. So they're analyzing their debt over their asset, and they're running scenarios. And once again, this is where people who take their blinders off are going to be very successful. There are many people out there that say, why would I ever refinance right now? I would never refinance because interest rates are so high. Well, you would refinance if actually you needed to, and you needed to have equity, and you thought that the property was going to do this for the next few years. And so we're seeing the very successful firms. And these range, by the way, from very large, very active, and them. They're the big names in either multifamily or some type of real estate vertical. But they're always known as sort of the sharp ones. But it's also happening to the ones that are smaller and leaner. And they're proving to the point that, hey, just because we didn't buy a bunch of properties, we do know how to operate. And they're using this, as I said, this is a very consistent. It wasn't like you go into one shop and they're doing one thing and not the other. The really good shops are taking all the data in, analyzing it, seeing what they can see, and then using that data to make scenarios and see how those scenarios work and impact their debt positions and their equity positions. And it's really just cash management. And it's just being much more proactive and opportunistic. I would say proactive to me means opportunistic.
Yeah. So I'm curious, when you say data, historically, like in acquisition mode, I always thought of data as like supply and demand, and basically the local economics with the property. How far outside of that are you seeing the data collection and analysis? Is it?
Yeah. So the data is, and yeah, data is sort of this misused word all the time, right? Because data could be anything, right? It could just be a piece of paper. What we're talking about is at its most basic level, property level operating data for your property and for your competitive properties in your market. That's it. I think we have this, once again, it comes back to we've transitioned to an operator's market. So when you think about operators, how do you know how well you're doing, right? It's like, hey, I'm the best operator. I've got a property in Vero Beach, Florida, right? How do I know I'm the best operator out there? Because I self-proclaim myself the best operator? No, because you take data from competitive properties that is available, and there are services that provide this data, and you can look and you can benchmark yourself to that data and say, wow, actually, no, it is me. I am better. Or, hey, it is me. I'm doing poorly. And it's not the market. right? So often I think there's a sentiment sometimes in this industry that we're seeing is that, oh, it's rates, right? When rates come down, we'll be okay. We're gonna be great. We're just gonna hold out until rates, right? Survive until 25. I don't know what happens in 25, but hey, it must be wonderful, right? But rates dropping on the short term, 150 doesn't do anything to the 10-year. And so, I don't know what people are thinking, but it also comes back to being able to look at your properties and operate them effectively. And so just the base level of data, which is your own operational stuff, right? Now especially if you're in multifamily, for example, you're looking at delinquency, you're looking at, traffic, you're looking at recoveries, rent roll, all this other stuff. There's no way one human can look at all of this data on a daily or weekly or monthly basis without synthesizing that, without getting something out. There's just no way to do it. And so many of these real estate shops aren't teamed with 100 people running through and taking their red markers and questioning numbers. You need data, and you need a way to synthesize this data to get it into one place. And that's what I mean by data and data collection.
Yeah, and I like the sense of the importance of the boots on the ground kind of data. I mean, like in the neighborhood and how you measure against the neighbors and just your marketplace. That always seems to be important. Um, with the focus on operations, um, and that more of a long-term hold. I mean, is it basically just that simple that people are no longer, they can't be looking for the exit. They've got to be looking on how can we operate this thing, make it profitable, be profitable, and continue to improve and attract quality tenants to where when we're ready to sell, we'll be in a good position. Is that because I mean, I think
I
that's
think
what.
that's one part of it, but quite frankly, we believe in debt as a lever to achieve returns, right? So to me, it's, there's liquidity events in real estate, right? There's the liquidity event of refinancing, right? And there's a liquidity event of a sale. And it doesn't have to be, it could be, yes, I'm selling the property and that's it, but there are ways to produce liquidity by leverage and debt, right? That could actually accelerate. So for example, if you think your property is going to be facing some real headwinds over the next few years, and even realizing that, yeah, interest rates will probably go down, analyzing, does it make sense to refinance now versus in the future, knowing that your cash flow is going to go down, right? So it comes down to a lot of it. This is just, once again, the dynamic of operating a property. People would spend hundreds of thousands of dollars building out their acquisition teams and all their research, right? They had every single, I got called 100 times a day. Hey, we want to buy your property. We want to buy your property, right? They need to take that same effort and put it into the operations. And quite frankly, by building that base of operations to a level, when the market does come back, or when there's opportunities that will arise, and they will arise, you're set and prepared to take this as an opportunity. And that's come back to that same story, right? All these people in real estate back in the 90s, they lost everything. The new players, one of the largest owners of commercial real estate in New Hampshire was a dentist, my dentist. Guy was a dentist, and then all of a sudden, all the properties go. Everybody is taken over. All these banks are taken over, and the RTC is shedding assets. And the only people that could buy them were people who were able to get financed and had some liquidity. So it's a time of opportunity, and I think the people who are, once again, not to belabor the point, but the people who are set up operationally and who can maximize their operations because they can actually prove that they can operate properties.
Yeah.
Then
Well, and another just kind of a reiteration here. You were saying that it's not unique to large operators. I mean, it's across the spectrum as far as large to small. But in that, does it not? I mean, the focus on operations, does it not then, I guess, make the focus on operating larger properties or creating a larger portfolio where you can really leverage the operations? I mean, is that where you see like the strong getting stronger, um, and operating larger portfolios, larger properties?
No, I actually think the opposite. I think the innovative, this will benefit the innovative, right? The people who think differently, the people who believe that their real estate organization is actually a tech company whose product is real estate, as opposed to a property company, right? Those are the ones that will benefit. In fact, those are the ones that are actually more nimble and have more opportunity, because the large ones are also filled with, hey, we've been doing this since 1935 when grandpa started the business. This is the way we do it. Okay, well, that's what the board at Blockbuster said too. So when they could buy Netflix, right? And that's all. And that's not to sound like everybody's, if you don't do this, you're going to peril. But history, and there's a lot of examples of innovators and being disruptive, having the opportunity here.
No, I appreciate that. So your background with the financing and the defeasance and that, um, do you see that being a critical uh, opportunity, a tool for a lot of the financing challenges that are facing some of the property owners?
Yeah, I think it was really my early background in writing loans, right? So, that was really some of my first jobs out of college were involved in loans. So, Lehman Brothers and Credit Suisse First Boston and Mid-Atlantic National Bank. So having that lending understanding, so understanding how important debt is, right? That's not like something you just buy it and set it and forget it and wait until it matures, right? To me, debt is a lever that is used to maximize your returns. It can be complex, but it's still a lever. So that's where my understanding of that came in. And from that's why I believe so strongly in it. And we've used it ourselves. We've generated returns based upon recapitalizations as opposed to selling. Now, we've sold in many cases, but it's also the recapitalization. It's the refinancing. It's understanding that debt is not in many cases, it makes sense when rates are very low, but it also does make sense when rates are high.
Right. Well, and I think one of the challenges that I guess personally see and just kind of, it's a mindset, I think, a lot with people that are used to operating at a certain bandwidth or expecting numbers to be a certain spread, uh, is that recalibration of what the debt cost, and how that affects the price that you're able to offer on an acquisition. But more so when you are operating a property and you've got your debt set, but you know that you've got a reset coming, and preparing for that reset so that you aren't uh, upside down or what have you. Um, you mentioned all these scenarios. When you run all these scenarios, I mean, I'm kind of reminded of like the NFL coach on the sidelines that has that laminated sheet that's you know up and down, and it has all these colors and boxes and all that stuff. Um, do you, well, for operators that are uh, things are good, but they are facing a reset, having run all of these scenarios, uh, do you find that it's more just a matter of kind of like looking at what the defense has set, then we run that play because we've run that scenario. This is where we go, or or is it more of just like that now that they've run all these scenarios that they are open minded to everything that's coming at them, and they're able to think more on their feet, or is it that they do have a plan that will get them to where they need to go?
Yeah, I think it's a great question. I love your analogy, right, of an NFL football coach, right? At the level of NFL, you're probably pretty assured that the coach going into a game has done their homework. They've done their study. They know their game plan. But more importantly, they have halftime to make changes and corrections, right? And so, and yeah, I love watching Tony Romo, right? Because he's the best, one of the best announcers out there. And Tony Romo was telling you what's going on. These coaches, absolutely, right? Could you imagine going in and you know what? You're getting picked apart because the quarterback is scrambling every play, and the quarterback and the coach are just, yep, just going to let it happen. No, we see that happening. We make our adjustments, and we do that, and we go right. And that's what we expect. Running these scenarios are running plays. What if it does this? What if it does that? What if it does this? What if it does that? Okay, we now are mindful in our decision-making process as opposed to just guessing, right? If I had to go coach an NFL team and I guarantee you I'd put every bit of money against me, even if I had the greatest team, even if I had a Tom Brady led team, still probably put the money against the other team. So that's the point is that you have to be prepared. You have to have this game plan in place, and everybody in your organization has to be on the same game plan as well. I think that's just as critical. And that comes back to you've reset. You've spent the last few years doing nothing but acquisitions and flipping deals, right? You need to be really good at operations. Everybody needs to know that your focus is we're going to set this base, we're going to set this operation. We are going to be the best in operations, and we'll be able to prove it, we'll be able to show it, we'll be able to replicate it. So when it comes time to find more deals, we have a certainty of success.
So let me ask you, so the owner group, the asset manager, they've taken this new approach. Are they foundationally able to improve the operations, or is this more of like a set for a future, like they're more looking at the future, or are they actually able to today affect and improve the operations and the net operating income and that?
Yeah, it's immediate, right? I mean, I'm sort of the same. I'm like, I don't want to delay self-gratification, right?
Right.
It's a human trait. I want it now. And that's what you have to do, right? So you have to think about this as you run your organization, speaking to CEOs and head people in these organizations, you have to see success, right? And it is a triage, right? We understand. I make no qualms about it. I'm not sitting over here preaching to the choir, and I'm living in a box that doesn't have it. I have the same challenges, right? I have insurance costs that have gone up 300%. I have oversupply in many of my markets. I have the list goes on and on. The key though is, yes, you need to start doing stuff that will impact you immediately. Otherwise, you might not have time to see if that's real or not, right? It's not worth putting in a huge system that's going to take years to develop, right? And hey, I want to put in Salesforce into my organization, or I want to put this big, Power BI business intelligence system into my organization. Well, you're going to spend hundreds of thousands, if not millions of dollars in a couple of years, and you might not have that. You might not be there to see the success. So it is about finding speed to return, speed to operational efficiencies is going to be key.
Yeah. So let me ask you, the asset managers across the board, the owners that you recognize, what percentage of the owners and asset managers do you feel that are embracing this, new view of things, as opposed to well, this is the way we always do it?
I think there's actually a third thing right now. Right now is pure fear is probably not the right word, but there's definitely a lot of concern. And concern is first and foremost, right? And I can understand that, right? If you're sitting there and you've got a portfolio of 15 properties and 5 are in real trouble, and another 5 are sort of marginal, and and then you've got all the operational issues that go along with it, and you've got caps that are expiring, and loans, and investors are demanding more, all that stuff. So I think that is what most firms are facing right now. So once you get past that, I think depending on how much pain there is the willingness to change and do things differently. And I think that's sort of because you have to, right? If you've been around for 150 years and you've got billion-dollar lines of credit, and and you've got your institutional investors that will step up. Yeah, you've got some, I mean, you see people who are getting, even the big shops get back properties, right? It's easier for them to recover than if Joe Smith does it, right? So it comes down to understand that fear. Perfect, that's great. Now, are we a fighter, or are we just going to roll on our backs? And if we're a fighter, we need to probably do things differently. And what are the things that we need to do? And I would take that playbook from some of these great shops and say, get my data so I can understand it, make decisions, understand, is it me or the market? So benchmarking, so data and analytics, benchmarking the market, is it me or the market? And third, utilizing a plan to understand interest rates and elevating the scenario process in order to run scenarios, that playbook that will get you to success.
Yeah, no, the price of progress is the pain of change.
Yeah.
I mean, that seems to be the case. Hey, I'm curious, just talking about, there's been this big migration down to the south, southeast, Florida specifically. And no state has been hit more squarely with the insurance challenge down there. Do you see any kind of a potential for investors to rethink where they're going based on some of the expenses? Or do you see that the market will settle out and it'll just be like an accepted level of expense? Does that make
I mean,
sense?
accepted probably over a period of time, right? I mean, it's
Yeah.
like anything, right? Have I accepted the price of gas?
Yeah.
More or less, it's not great, but I've accepted it. I think the people who want to invest in Florida, who feel strongly about the migration patterns and the investment thesis for Florida, um, will continue to invest in Florida, right? I think but it's not as simple as just, you know, there will be a dynamic challenge, right? Somebody has to pay, right? If insurance costs are going up as much as they are, you have to either charge more rent or accept less money. And so I think that's just sort of the dynamic and the thesis that's going to have to be run. It's just an investment thesis. It's just, let's get scenarios. If my insurance keeps on going up, this is what our return's going to be. Can we live with this? Sure. Maybe not. Right? We make those decisions. It's like everything, right? The property manager can no longer beat up the landscape contractor anymore. So when insurance rises this much, somebody's gonna have to take a hit.
Yeah. No, I just know personally just how it's affecting the NOI on properties. It's like, holy moly. I mean, it's a significant portion of the budget where, years ago it was not so dramatically affecting the NOI there. So
Yeah, well, it's not just that, but I mean, can you even get it is one, right? So
yeah,
being a resident of Florida and a homeowner sitting out here with water around me, I know that's, getting insurance is also a challenge. But then the second is, what is the deductible? And so seeing these massive deductibles on named storms then becomes a separate issue, right? Now it becomes a real cash management issue. So you got to pay $1 million for a deductible to go fix your roofs that were in a named storm.
yeah. No, I think there's a lot of just as a kind of a side note here on insurance. I think the insurance companies kind of pull back from what they believe to be a certain claim. You
Mhm.
know, if they believe that the hurricane's coming and your roof's going to get peeled off, how can they not pay for the roof? Well, increase the deductible to what a roof costs. You know, that's
Yeah.
kind of an easy one.
Yeah.
And so I think there is what you said, just kind of it's more of a cash management kind of thing, is making sure you're well reserved for whatever those events are that thought you might be able to transfer to the insurance company. But uh, I think more again, just the pain of change, or just, when we're in the middle of it, it's disruptive. But I think the important thing to remember is what you started with is the opportunity.
Yep.
And it's taken me a long time, but I've finally gotten to a point of understanding and recognizing one of the beauties of the American economy is the chaos, and that the chaos creates the opportunity. And so if you can remember that in the chaos, and recognize that there's going to be an opportunity, and you can prepare for it, you're more than likely to have the opportunities come shortly after the chaos, or in the chaos, and to improve your situation. So
Yeah. Well said. Well said. It's hard, and stay positive, my friends, right? That's
yeah, yeah,
yeah.
yeah. Hey, Rob, if we could, I'd like to shift gears here for a second. As I've mentioned by day, I'm an insurance broker, and I work with my clients to assess risk and determine what to do with the risk. And there's three strategies we typically consider. First, we look to see if we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we cannot avoid nor minimize the risk, we look to see if we can transfer the risk. And that's what an insurance policy is. And as such, I like to ask my guests if they can look at their own situation. It could be interest rates, the Fed, local politics, you know, whatever headwinds may be coming that you identify to be the biggest risk. And for clarification, again, while I'm an insurance broker, I'm not necessarily looking for an insurance related answer. And so if you're willing, I'd like to ask you, Rob Finlay, what is the biggest risk?
So, not sure if there's one specific one, and just so hopefully I can give you one right now that is on top of mind for me, right? Because property insurance is property insurance, and that's been spoken about, and fortunately we have people like you that help us real estate owners get through that mess. The one thing that property insurance people aren't going to help us with is what I see as this great risk is compliance and corporate risk. There is this thing out there for anybody who's in real estate. I want everybody who's in real estate, who are all your listeners, to understand. If you have not heard of what this Corporate Transparency Act, or CTA, whatever it's called, is, write it down. CTA, look it up, and actually make sure it's Corporate Transparency Act. The Corporate Transparency Act is where anybody who's in commercial real estate, anybody who's in real estate, anybody who has an LLC, an entity, must file with the US Treasury any type of beneficial ownership, any type of direct control, any type of indirect, like all these different requirements. And I think where most real estate people are, they're like, okay, yeah, you know what? My attorney will deal with this, or my accountant will deal with this. The accountants don't want to touch it. The attorneys will have to do an incredible amount of research to see, and then you have to track it and do all this stuff. If you don't, so right now, if you file an LLC, if you create an LLC, I think you have like 60 or 90 days to file. But in 2024, so this year, you must file this form with the Department of Treasury for all of your entities. And if you don't, it's a big one, right? These are like, you're talking about like hundreds and thousands of dollars per day fine. So what I would say is, from me, from a risk standpoint, is one, this is an administrative and corporate risk that typically will fall under the radar until probably December, probably last week in December, when I will now need to go get information and do all this work for all of my entities. and then try to load it up into, some US Treasury database, right? Some form, like I'm gonna have to go sit there and input dot by dot. The systems are gonna crash. It's like all of a sudden telling everybody, hey, you have to file your taxes, but you're not doing it until the last possible second, and you don't know what you're filing, right? You have none of the paperwork. So to me, there are a lot of risks out there, right? You could go into data risk, you can go on, all this other stuff. But quite frankly, this is risk that can be avoided. Well, actually, I don't know. You can't avoid it because you have to do it, right? You can minimize it by being proactive. And third, you could probably transfer it. There are companies out there that will handle it for you. So, you can't avoid it, but you can minimize it by being proactive and looking at it now, not December 31st.
No, I appreciate you bringing that up. It's, I know of it, and I've heard, I don't say whispers, but not a lot of, in your face, kind of like, wake up, it's real kind of thing. And just to be aware of it and make sure you're complying or, doing what you need to do to avoid the penalties. So I appreciate you sharing that. Hey, Rob, where can listeners go if they'd like to learn more or connect with you?
Yep. So, obviously they can go to 30capital.com. That way they can connect, or they can go to robfinlay.com. And that's my personal site. That's where you can get my book and see some of the other things that I'm up to. Also LinkedIn, Instagram, all the social channels, but you can go to 30capital.com, see the products and services that we offer, our investments, our portfolio, and connect with me. I actually do like getting feedback. So just don't hook up with me on LinkedIn only to try to sell me something. So.
No, well said. Appreciate that. So, all right. Well, hey, Rob Finlay, I cannot say thanks enough for taking the time to talk today. I've enjoyed it, learned a lot, and look forward to doing it again soon.
Sounds good. Thanks, Darren. Thanks for having me. I appreciate it.
You got it. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.